What's good, YouTube? It's your boy Sam, and welcome to my channel. This is going to be the first video on this journey that I am taking. I plan on talking about finances and talking about stocks, how to make passive income or money on the market. It's not really passive because it's something that you're actively engaged in, but a lot of people want to get into it. Stocks is like the basicest form or the most basic form of investing, and a lot of people don't really know where to start. However, I'm coming to you guys as a student, not necessarily a teacher, right? So we're going to learn together. Um, a lot of the things that I'm talking about is going to be at my level of experience, right? So I'm not going to look up too much things or give you guys these boring definitions because in that case, you could either look it up yourself or just watch somebody else, right? So this is supposed to be a fun environment where your brain doesn't hurt and you don't feel like you're in class, right? That's the whole point of this channel, and I'm gonna get that to you guys, right? I feel like I'm a very decent explainer, I guess. Um, it's not the most formal, but I think I can get the point across, right? So, for the first episode, we are going to be talking about stocks, right? What is a stock? Okay, a lot of people are very familiar with this term, but don't really know what it means. So, when you have a company that is on the stock market, right, that is publicly uh, traded, right, because you can also have stocks in the private sector as well, which we'll get into at a later time. But when we think of like big blue chip companies like Apple, Nvidia, uh, Tesla, right? Nike. These are really big companies that are publicly traded that you can trade on the stock market. So, a lot of these companies have shares that you can buy, right? Once you buy one share, you are technically a partial owner of that company, right? So, like, let's take Walmart, for example, right? Walmart has a lot of shares out there that you can purchase, right? But they are limited. There's a certain amount of shares that is available to get, right? And depending on how supply and demand is, that's what's going to drive the price of that stock, up or down, pretty much in a nutshell, okay? So a lot of people are wondering, okay, how do I make money on the stock market? How do I make money on the stock market, right? So there are different platforms that you can use to make money on the stock market. The platform you use, I don't want to say it doesn't really matter, right? Because they all serve the same purpose to buy and sell shares, right? But there are different advantages to the different platforms you can use, and we can talk about that in another video, right? The platform that I use is Robinhood. It's very convenient, right? I'm always on the go. um, Unfortunately, I do not have the pleasure of just sitting down in front of my computer and trading all day. Like the fellow day traders out there. Shout out to the day traders. I'm not really a day trader, but we're gonna talk about the benefits of Robinhood, right? So Robinhood is just very convenient. Um, there are no fees, right? So usually when you buy and sell stocks, there are usually fees that are associated with that. Robinhood is free. Um, and it has a decent amount of tools that you could use, like different charts and indicators, things of that nature. Not as much as, like, let's say Thinkorswim. Thinkorswim is like a software or platform you can use to trade stocks as well. It's a little bit more advanced, right? So it has indicators, and what indicators are, it's kind of like AI before the AI, right? Like it calculates where a stock price is projected to go based off of certain patterns. However, there's nothing that can actually predict what a stock's going to do next, but patterns you could pretty much follow patterns to have a good idea or better probability versus somebody who's not using indicators at all. Right. So, let's take Walmart for example. We're going to use Walmart in this example, right? So a lot of people hear, yeah, you buy low, you sell high. You buy low, you sell high. But what does that mean, right? Buying low and selling high, right? So let's say price of Walmart is trading at $50 a share. Just an example. If you look this up and it's not $50 a share, don't get confused. Just an example, right? So if it's trading at $50 a share, and you watch it like at the market open, which usually opens around 0930. Not around. It opens at 0930 every day, Monday through Friday, right? On the weekdays, if it's not a federal holiday, right? Um, so at 9:30, stock market opens. You know the price is going to fluctuate. It's not going to stay the same unless the market is not liquid. And we're not going to get to that yet, but usually it's going to be liquid, especially if you're trading like these big companies like Walmart, Apple, Tesla, right? It's just a lot of people trading that stock, and so it's going to be fluctuating a lot. Let's say, I don't know, Walmart is down one day, like say like a good amount of percentage, and it's trading at like $40 a share. That would be like a discounted price, right? And typically you'd want to buy it at $40 a share, right? And whenever it gets back up there, or if it's higher than the price you bought it at, right, which would be considered your cost average, then you would sell it and make your profit, right? So if you have one share that you bought at $40, it went up to $50, you sold it, you would make $10 off of that stock, off of that share, right? And obviously, if you had two shares and you bought two at $40, you sold it at 50, you would have $20. That's pretty much how it works. Now, I know I made it sound simple, but unfortunately, it is not that simple, right? It's I don't know if you guys heard the phrase, right? You can't beat the market. That is true. You can't beat the market, but you can definitely capitalize off the market. So that's what we're going to do. We're going to capitalize off of the market. With that being said, let's talk about some of the basic fundamentals of the stock, right? Usually you have an ask price and a bid price, and it's going to be off probably by a cent or two, and that's basically how the people managing these stocks, or the institutions managing these stocks, make a profit, right? Um, just off of the ask and bid price, right? So if you see the price of Walmart at, let's say, $40 a share, that's probably the ask price, and the bid price would probably be like 39.98. Okay, that's the bid price. Meaning, if you was to buy and sell it instantly, you would be at a 2 cent loss. But that just goes with just the fees associated with managing these stocks. Um, let's see. So, usually when we talk about stocks, right, a lot of people, they're not going to disclose their personal information, like how much money they make, and you really shouldn't, to be honest with you, right? Like, if that's what you're thinking about, that's a shallow way of thinking, because you have people who make millions and millions of dollars off of the same stocks that you're probably making like a couple cents on, right? But that's because they have more capital invested. They have more money in the stock market. They have more shares. And so with every cent, you times that by how many shares they have, right? If you have, just example here, let's not start crazy, but if you have a million shares, right, like you're a billionaire, you have a million shares, and the stock goes up $1 from the price that you bought it at, you are up $1 million. Okay, yes, it's that simple. But the thing with the stock market, you gotta be willing to take risks. Okay, we gotta start getting in the mindset of making your money work for you. You shouldn't work for money. You should make your money work for you. Now, sometimes, unfortunately, we have to work for money, right? That's just pretty much how the system is. That's how the majority of the population was raised, and you kind of have to get out of that mindset, because once you understand the power of the dollar, then you will no longer want to work a 9 to 5, right? You would want to make that shift, have your money, make money for you. Um, you don't have to start big, and a lot of people can't start big, but starting is the main thing, right? So even if you have like a spare dollar or two, right, invest it in the stock market, right? Grow your portfolio. You should make periodic deposits to where you don't really feel the money coming out of your bank account, but over time you can see it accumulate in your portfolio. That way you have more capital so that you can, you know, um, purchase more stocks. Okay, so what else should we talk about? Right, stocks to look at. Okay, so a lot of people like to purchase stocks because the companies pay dividends, right? So what that means is a company will pay you periodically, not much, right? But pay you periodically for owning shares of the company. So that's how they get people to come in and raise the market cap for that company. That's a very slow method, a safe method, a very safe and smart method, but a very slow method of generating income, right? But a very smart way. I'm not trying to knock it. I'm a very aggressive trader. So I just want to start with that off the back. If you're not doing or trading the way I do it, don't feel bad at all. Okay? But I just want to share this knowledge with you guys. So, let's say Tesla. Tesla pays dividends. I'm not really sure, but I think Tesla does pay dividends. And these are things you could look up, right? So you could look up to see, how much dividends Tesla pays out. So what that mean is owning the shares for a specific amount of time. When it comes time for the dividend payout date, you'll get a notification and you'll notice that money will be deposited into your account, because dividends, giving you dividends. The best thing to do, especially if you don't know how to trade, is to purchase stock and hang on to it over time, right? Because the stock market essentially it increases with time, but you just want to make sure that you pick the right companies. You don't want to pick a company that's going bankrupt or that's laying flat. And with that, you can use the charts to kind of see where the stock is going or has came from in the past. And there are different ways to look at charts, right? You can look at the 1 day chart, which tells you the price action of the stock within that day. You can look at the 1 week chart. You could look at the 1 month chart, 3 month chart, 6 month chart, right? Year to date, 1 year chart, 5 year chart, max chart, you name it, right? And that'll give you a good spectrum of how that stock was performing over the course of the years. So if you see a company and it started out, let's say, I don't know, $10 5 years ago, and now it's trading at 200 and something dollars, right? It's a pretty solid company that you might want to invest in if it maintains that upward trajectory, right? That's something you can put your money in, and maybe 5 years down the line, you might more than quadruple 10 times your money, right? But you gotta believe in the company. You gotta understand where the company sits at around this time in this day and age. Well, let's use Amazon for example. Amazon would have been a perfect stock. And I'm not saying it's not a good stock now, but it would have been a perfect stock to invest in 5 years ago, right? With just where Amazon has came, how far Amazon has came from 5 years ago, right? Like they got Ring, right? They got Prime Delivery, right? It's just really merging with AI right now and just making sure that it serves its customers well, right? So you'd have made a whole lot of money had you invested, you know, a few dollars in Amazon a few years back. Um, Tesla, right? Tesla's another good one, right? Tesla, I know Elon Musk, his mission is autonomous driving, the robo taxi, just essentially just getting the transportation, the means of transportation to that next level, right? So I definitely see that happening in the next couple of years, right? So that's something that you might want to invest in. But you also want to pay attention to the news as well, right? The news could be a key factor in determining what the company's doing, who's the CEO of the company, right? Depending on how they speak, if they're a very controversial CEO, you can expect the stock to go up and down and be more volatile, than let's say a stock that's not really talked about on the news that much. But there are different ways to capitalize off of volatility, right? So if some bad news comes out and there's a huge dip because people are gonna get on that bandwagon, right? Even if you have a vision for that stock going way up there, but some bad news comes out, right? Unfortunately, you gotta follow the crowd if you're day trading or swing trading, right? You gotta be able to sell at those highs, rebuy again at those lows, or you could just hang on to it, right? Cancel out the noise, and a few years down the road, you could reinvest, or you could take your money out, reinvest in something else, or however you want to do it. So that's one special thing about the stock market, right? Like, no matter who comes in front of your screen, whether you have a couple dollars in your bank account or billions of dollars, you could still be a good trader, but have different means of trading. There's no one right way. The market is just so complex in the sense where you gotta do what works for you. So with that being said, whatever you learn from me later on this journey, make sure you take notes, make sure you do your own research, and you come back to the videos, right, and have a good understanding on what it is I'm talking about, and apply your way of trading into investing. That's the best way to do it. Okay, so make sure you get your pen out, your paper, take some good notes. Okay, take some good notes, but always take what everybody says with a grain of salt, and always pause, right? Fortunately, with YouTube, you have the ability to pause, rewind, rewatch again, right? So make sure you do that. Take some notes, journal, right? Go back, do some research, and make sure you understand what it is that maybe I did not explain to you to its full capacity, or just something that you're just having trouble grasping or visualizing, right? And YouTube is a good way as well, like not just for me explaining, but actual like animated videos. I do not plan on doing animated videos. Hopefully, as the channel goes on, I will, draw stuff out for you, maybe put something on the screen. But I just want to keep this raw and uncut. I don't want to keep it like death by PowerPoint, by just showing you guys slides and having these generic definitions of what a stock is, what a share is, or what's a blue chip company, all those things. I'm very open to feedback as well, so don't hesitate to get in the comment section. Let me know what it is that you guys want to hear. Make sure you like, comment, subscribe, and share this video. Okay. Um, I'm very excited for this journey, and as we elevate, as we go along, my goal right now is to get 500 subscribers. Once I have 500 subscribers, I can have like a members only, um, members only YouTube videos, right? Not that I don't want to share the gems with you guys, like the real gems, right? Because the real gems are coming. This is just basic level stuff. I definitely want to share the gems with you guys, but a lot of people out there, a lot of nosy people out there, not saying that. And you guys might be saying, okay, well, if you're worried about nosy people liking on YouTube, it's just certain things you just gotta keep in control. You understand? And as you guys get further along with me in this journey, you will understand. And however much it costs to watch some of these members only videos, I'm gonna tell you now, it's gonna be worth it. You're gonna be making it on the back end. Okay, so I'm real excited for that. Right. Also, if you want to follow me on Instagram, it is at Sam Man. That is at sam.dat.man. I plan on getting a beautiful sign here, hopefully soon. My neon sign that says my at handle. I just think it's just gonna be like a nice little touch, right? We don't gotta get too crazy, and I also don't really feel like editing it on the screen, right? Just easy things to do, but we just gonna put it right there. That's gonna be my signature look. Okay, but this is the first video, so just kind of letting you guys know what the plan is, what the mission is. Um, yeah, we're also excited to hear back from you guys as well. And what I plan on doing on this channel as well is just getting real in depth on like stock terminology, just the fundamentals of trading, just things that textbooks and other YouTube videos that I've seen don't really explain. Okay, I'm gonna explain that to you. Unfortunately, and it's not unfortunately, but fortunately, right? It's unfortunately as I was going through it, but just looking at it in hindsight now, kind of had to do it the hard way, right? Just kind of had to dig in those textbooks. Not really textbooks, but I had to really do some Google searching, and you'll really learn through problems and trials. So no matter how much you feel like you're learning by watching my video, if you're not doing any of these things and you're not exercising what you know or what you learned, then you're not going to make much progress, right? You got to actually do it. I know a lot of people out there with like economics degrees that could, just give you the definitions of different terminologies within the stock market or that's you know in that world, but never traded a day in their life, right? These are not the people you want to be following, right? So thank you guys for staying with me for these 20 minutes of me talking, right? The videos are going to get a lot better from here, I promise. This was just the first video, but like I said before, make sure you like, comment, subscribe, and share. I'm out.